Hello everyone, a very good morning, good afternoon, and good evening to all of you. This is your host Vaibhav. In today's session of correlation and regression, we will be trying to make sense of these topsy-turvy volatile markets in which we have greater range for today's trading session compared to the last two trading sessions where the volatility was much less in comparison to today. But even in these enlarged range, we don't really have a strong momentum on either side. I think JPY currency crosses might be considered as some sort of exception. In JPY, there was depreciation which took the USD JPY and other JPY crosses on the higher side. But similar kind of moves are lacking, and if we consider the Euro, USD, or for that matter, other major currencies trading against the US dollar, we have the range which is higher, but the lack of momentum is also visible there. There is the AUD USD chart. Let's first consider the euro to see what's the development. This is the thing I was talking about in my introductory remark. If we consider the price development from the Asian trading session to the European trading session and now in the North American trading session, here you can notice that the range is higher. We have almost 50 pips range for today's trading session. So the volatility is back into the play. But if we consider these price formation, here you will notice that this is still a case of consolidation with higher range, with higher volatility. So even in today's trading session, all we have to do is trade, keeping in mind that the current scenario is more favorable for scalping kinds of trade where we can expect these ongoing consolidation to continue with extended range, and unless we have a breakthrough breakout on either side which is also sustained for a good amount of time, we shouldn't really be banking on the one way moves which are sustained and which we can use to look for long or even larger duration swing trades. So in this context, we will have to keep looking for the trading opportunities. We will have to, I think, restrict today's trades for intraday purposes with stop loss and target price being closer to the entry points in particular. We can't really go with long range target prices and stop losses, as current scenario is not that favorable for big trades. Euro USD, after climbing to the 1.087 range, again it is back to where it was earlier in the day, not really far off from this lower point. And looking at the current trajectory of the price formation, I think unless we have a fresh breakout above this immediate swing high, this current momentum of the consolidation has now turned slightly bearish. So keeping that in mind, we can keep looking for short selling opportunities in the euro. But then, of course, the natural question that arises whether it is better to short the euro against the US dollar, or if we have more bearish instruments into play against the US dollar, and how things are likely to shape up in the latter part of today's trading session, along with what is in store for the remaining part of this week, which we will have to consider as well while making any trading decision. If we consider the hourly charting formation here, the formation is still of higher highs and higher lows. So unless we have a fresh break, new swing low below this immediate low around 1.0817, we will have to go with the flow and keep looking for buy on dips trades on these hourly charting formation. And this time around, we will have to allow some more time for consolidation. And if for next couple of hours we don't really see a break below this prior swing low, then I think in that scenario, we can indeed initiate a new trade with the expectations of euro climbing back towards this immediate swing high. But for that, we have to take a cautious approach and wait it out and not really go for the long trade at the current levels. Whether to go short or whether to go long, we have to consider the best possible combination of the instrument trading against the dollar. So let's compare the price formation of the Euro USD with other major currencies like AUD, GBP, NZD, CHF, JPY, and of course not to forget the Canadian dollar, which was one of the most bullish instrument in yesterday's trading session. AUD, after spending the day with a bearish undertone, seems to have found some buying on the lower levels around 0.666, and it saw a sharp move on the higher side, which is not really the case with other major currencies. Even in euro, this late move is lacking. Let's consider GBP. GBP had not really seen a move like that either. So you can say that AUD and its Asia Pacific peer, the NZD, were some sort of in a unique situation. For CAD, yeah, there was this sharp move of around 40 pips. So the CAD is also joining in this late surge against the US dollar. For CHF, the CHF is not really appreciating, rather it is in this situation where it is depreciating. CHF has been one of the most bearish instrument against the US dollar, along with the JPY, which is also trading quite bearish in today's trading session. So this is the thing I was talking about in my introductory remarks, that JPY is one of the most bearish currency instrument against the US dollar, and here it is again trying to make a fresh swing high, and in time it is likely to cross this prior swing high of 132.66 and make a move towards 133 in coming hours. So that possibility is looking quite strong. It has depreciated against the US dollar, the Japanese yen, for most part of today's trading session. The day started closer to 131. Now it is higher by around 1 percentage point, and even right now it is not really showing any signs of stopping these upward march. We are pretty much likely to see this prior swing high of 133 being breached in coming hours or coming days if it needs more time. But JPY is apparently much more bearish even in comparison to the euro. So rather than shorting the euro against the US dollar, the JPY is a better choice to short. You can buy the US dollar against the JPY, essentially meaning you will be buying the USD JPY whenever you see that the risk reward ratio is favorable, and all you need to do is go for a optimum risk reward ratio where you feel that the risk is rather limited and you can expect decent gains if it continues its trajectory of making these higher highs and higher lows. So watch out for these price moves for next couple of hours, and if it seems to be holding these levels, then I think JPY is apparently much more bearish in comparison to the euro. AUD, as it is showing some of these bullish momentum of late, I think it is better to omit it from the possibility of going short against the AUD. Instead, if we see that stability returns and if we see the AUD USD is able to hold above this prior swing low, this immediate swing low, then we can even keep looking for the opportunities to initiate the long trades. So watch out for the AUD USD's consolidation, which is ongoing. And if it doesn't really dip much on the lower side, we can indeed go for a long trade. So AUD is one such instrument which is having the bullish undertone of late, and in light of that, it is not really advisable to short it. CAD is also having a similar price formation where it has started to make these lower lows and lower highs. So the CAD is also one such option where you can expect the US dollar to remain on the back foot. If you expect the Canadian dollar strength to continue in coming hours, then CAD is also a decent choice to go long. Then you have to compare whether the CAD is more bullish or if the AUD is more bullish, and I think the formation is more favorable for the Canadian dollar. Even in yesterday's session, it was one of the most bullish instrument against the US dollar. Same thing is true in today's session. Also, here you will see that CAD has successfully crossed below this prior swing low, and it is now in a newer territory below the breakout level of 1.36, the level which I had talked about in yesterday's trading session. Now that we have the breakout on the lower side, I'm expecting in course of time the USD CAD to decline towards 1.35. So that possibility is there, and you can put it ahead of the AUD, ahead of the Australian dollar. So the Canadian dollar is trading stronger than the Australian dollar. That is what our correlational analysis is telling us. The NZD is looking neither bullish nor that bearish. We have better momentum in euro. If you are looking for the trades in which you expect these currencies to remain bearish against the US dollar, then the euro, the JPY, and even CHF are looking like much better choice rather than shorting the NZD/USD. NZD/USD has also been one of the bearish currencies. If we look at the charting formation from the medium term perspective, here you can notice that it has declined significantly from this immediate high touched in yesterday's session. Actually, early in the day in Asian trading hours, it was at the high of 0.6270. From there on, it has declined substantially, almost close to 1 percentage point from highest point to the lowest point. So right now it is also in a bearish territory, but it is not overtly bearish, so we will have to avoid it and go with the instruments where there is much more clarity. Let's consider the GBP. GBP is also having this sideways price formation where there is not much of an clarity. It has now declined below this immediate swing low, so that also makes it a less favorable choice to go long from the medium term perspective also. But nor it is a good choice to go short on the current levels, as there is not much conviction in this current price formation. So I think GBP also is a currency cross where adopting a waiting on the sidelines is a better approach to work with. There is not much of an clarity in this price formation, so in light of that, we will do well to simply sit on the sidelines and go with the instruments like USD JPY, where there is much more clarity. The USD JPY is a good choice to go long, and if you expect the US dollar to trade on the back foot, then USD CAD is the good choice to short. So this is the extreme of the spectrum, while all other major currencies are falling in between. Now let's shift our gaze to the equity segment and consider what's the story there. For the Dow, last two trading sessions were less bearish than its other counterparts. Let's consider what's the scenario in today's trading session. For today, it went on to make a new swing high, but it hasn't been able to sustain those gains. And after the start of the North American trading session, there is this 100 to 150 pips decline from this highest level. So I think in light of this, we will have to try to gauge the mood of the market in equities using these three equity indices. The S&P 500 is also trading with a similar price formation. The Nasdaq was actually one of the most bullish instrument in today's trading session with these substantial gains. And here we saw this fresh move on the higher side of around 100 points, but those gains also evaporated and it wasn't really able to sustain. Now let's consider the lower time frame charting to see what's the story. So here we had a breakout of sort on these levels of around 12,720, and currently I think we will have to allow this price formation to stabilize a bit, and if this deep doesn't really extend below this immediate swing low, then we can expect the Nasdaq to continue to have its current momentum, which is more favorable for a long trade from the intraday perspective, to hold well, and we can indeed go for a new long trade as well. Purely from the intraday perspective, there is not much of an clarity on the medium term, the swing trading side, so it is better to simply limit our outlook for today's intraday trading session. The S&P 500 is looking slightly less bullish in comparison to the Nasdaq, as it is also holding currently above this prior swing low, but its low was fairly close to the prior swing low, whereas Nasdaq has turned the corner slightly on the higher side. And for Dow Jones Industrial Average, it has gone on to make a fresh swing low. So the clarity is now emerging that Nasdaq is the least bearish instrument of all these three equity indices for the United States, whereas the Dow Jones Industrial Average is the most bearish one of all these three. So depending on what kind of outlook you have of the today's equity segment, if you want to go long, then Nasdaq is seemingly a better choice. If you want to go short, then the Dow Jones Industrial Average is looking like a obvious choice in this current scenario where the price formation is not really that conclusive. We are seeing the Dow Jones Industrial Average struggling after this fresh swing high was made. So I think even in today's trading session, we will have to embrace this consolidation phase and be content with range bound moves. So there is lack of this momentum, a strong momentum on either side. So that's my take looking at the current equity segment price formation, where we saw there is divergence in the price formation of these three key equity indices. Similar kind of divergence is also visible on the forex side with USD CAD trading on the bullish side and the JPY trading on the bearish side against the US dollar. So you have a whole lot of options and choices available to trade in the today's market segment, where you can go long or go short depending on the conviction you have gathered, you have found using various trading techniques, and then these correlational aspects are telling you where the opportunities lie in terms of the momentum being strong or weak in these scenarios. So that's all from my side for today's trading session. If any of you have any query or any idea to share, do write to me in the feedback and I would be more than happy to take the discussion forward. Thank you all for joining in. Have a fabulous time ahead. See you next time around. Till then, goodbye.